If you're self-employed in Alberta, you can have your full down payment ready and still have the lender slow you down because of how the money looks like on paper. Most buyers assume that the down payment is pretty simple. The money is in my account, so everything should be fine. But lenders are not just looking to see if the money is in your account. They are looking to see if that money is yours and can they use that money as the down payment. So in this video, I'm going to walk you through how lenders in Alberta verify your down payment, talk about what they're trying to confirm, what raises the red flags, and what you need to do before you apply so your down payment does not slow down your file. My name is Ushindi Mutabazi, also known as the self-employed mortgage guy. I am a mortgage associate here in Alberta, and I specialize in helping self-employed Albertans like yourself qualify for a mortgage without waiting for the 2-year income average, pay more in taxes, or changing the way that you run your business. When the lender looks at your down payment, they are trying to answer a few questions. Is this money actually there? Where did it come from? Can the story be documented clearly? And does any part of the down payment create any new problems somewhere else in the file? The issue is never just the amount of the down payment. It's the source, the trail, the timing, and whether or not the lender can actually get comfortable with the down payment. So instead of asking yourself, do I have the down payment amount? The better question is actually, can I prove this down payment in a way that makes the lender feel comfortable? And if you're self-employed, this actually matters even more because self-employed files usually get more reviewed than a regular T4 file. On a self-employed file, there's more attention to income, deposits, and movement between business and personal accounts. The easiest files are the ones where you look at the documentation and the down payment makes sense right away. Maybe it's savings you built out throughout the years, maybe it came from selling property, it could even be a gift that was properly documented. These are the kind of down payments that lenders love to see. The money makes sense, the trail makes sense, and the documentation behind the application supports the whole story. If you run your own business, however, that might be a little bit harder to accomplish because moving money around feels normal to you. On a day-to-day basis, you probably transfer money between accounts, pay yourself whenever you need, and you might even have large deposits hitting your account at different times depending on how you get paid. From a lender's side, they are seeing all this movement and wondering what is going on here. They have zero idea why such a huge deposit showed up 2 weeks ago unless the documentation properly explains it. So when the lender is verifying your down payment, they want to see where the money is now, how it got there, and whether the trail makes sense from the beginning to the end. This video is sponsored by myself. If you're looking to buy a home in the next 6 months or just want some clarity on your current position and where you stand, click the first link in the description and complete my 3-minute mortgage readiness quiz. It's completely customized, and once you complete that quiz, I will personally record you a custom video within 24 hours, breaking down your real numbers, explaining exactly how a lender would view your file, and laying out a clear approval strategy based on your timeline and your goals. This is not automated, it's me doing the work. Also, make sure to follow me on Instagram at @itsushindi for more self-employed mortgage advice. Or if you have any questions and just want to chat, a link for that will be in the description as well. Let's get back to the video. Most of the self-employed down payment issues that I've seen usually fall into 3 buckets. Either the money is too recent, the money is unclear, or the money came from the wrong source. Too recent means the large deposit showed up too close to the application, and now the lender wants to know exactly what it is. Too unclear means that the money trail is messy. Maybe it's cash, multiple transfers, still tied in with the business. The story might make sense in your head, but on paper, it literally looks like you're Walter White. And the third one, the wrong source, could be money that looks borrowed, could be money that came from a third party unexpectedly, or even a gift, but it was never properly documented. The good news is none of these automatically kill your approval, but they all do create questions. And instead of questions, what you want is your down payment to be as easy as possible to follow. Something to keep in mind is that not all lenders will interpret your down payment the same way, so it is always important to be in multiple communication with multiple different lenders. In most cases, the more down payment you have, the more lender options you will have, and the more flexibility you can create for yourself. This does not mean that every single self-employed buyer needs to have a huge down payment, but it does mean that your down payment has more benefits than just one. A common mistake people make is treating self-employed mortgage shopping like regular rate shopping. They think the goal is to find the lowest rate possible. But if your income is more nuanced and your down payment needs further explanation and more context, the goal is not to find any lender. The goal is to find the right lender for your situation and the way your file is built. So what should you do before you apply? The first thing I would suggest is keep your money trail clean. If you can avoid it, do not move funds around carelessly right before applying. Typically, having the money in your account for at least 90 days is preferred. That way the lender can see that one, this money is yours, and two, you're not relying on it to be paying bills. The second thing I would suggest is for you to know and document every single large deposit that hits your account. That means you want to keep the documents for anything that is not simple savings. If it's a gift, make sure to document it properly. If it comes from a sale, keep the sales paperwork, and if it comes from your business, be ready to show and explain that movement. And the third thing that I would suggest you do before you apply is get clarity. The worst time to discover that your down payment story is messy is after you've already found a home and the clock is ticking. And although it's not fair, your application will be under a lot more scrutiny than a regular T4 application, so make sure you're very clear on what you're doing and you allow enough time. You want to go into this process thinking, what can I do to make their job as easy as possible and to answer any questions before they even come up. If you're planning to buy a home in the next 6 months and you want to make sure your down payment, income, and full mortgage file actually makes sense before you apply, click the first link in the description and complete my 3-minute mortgage readiness quiz. Once you complete that quiz, I will personally sit down, record you a custom video within 24 hours, breaking down your real numbers, explaining exactly how a lender would view your file, and laying out a clear approval strategy based on your timeline and your goals. Also, make sure to follow me on Instagram at Self-Employed Mortgage Guy for more self-employed mortgage advice, or if you have any questions and want to chat, a link for that will be in the description as well.